Alrighty, hey everybody, Goose, my man, Lieutenant Colonel, good to see you this morning. Don, David, there you go, David. You can quit being sarcastic about me always starting late. Started early. Ha! Rob, Craig, Arturo, Serge, Svenborn, Gary, Will, Hugh, Jim, Diane, Mad, David, Skaggs, David Kerfield, Ted. Good to see everybody. All right, I got a poll. Let me Fortunately, I can't set up the polls before I go live, and I don't have a sidekick to do this for me. So, let's see. To the government shutdown. I gotta correct my spelling. This doesn't have a spell checker. I am an engineer, not a good spell checker, so hopefully I spelled this right. Start a poll. Have you curbed any of your spending due to the government shutdown? I just want to feel everybody out. Like, what's the concerns here? And, obviously there has been some people feeling the pain or something. So, people aren't so willing to, I don't know. I don't know how to say it, but it looks like one person at least so far. Everybody vote on that for the next few minutes while I talk about rare earths. So, welcome everybody. Welcome back to the show. Now, for a few hundred years, if you told a Texan that you were going to drill a hole in their backyard, they'd assume that you're looking for one thing: that Texas tea, that black gold, the stuff that buys you a 10-gallon hat with a new Cadillac. Well, what if I told you that the new Texas Gold Rush isn't black at all? And not for a gas guzzler. It's for your Tesla or EV. What if I told you the biggest names in oil are now chasing something that looks a lot like salty water? Kind of sounds crazy, but just bear with me a minute here. We're witnessing a seismic shift right under our feet. For those who are paying attention, it's a massive potential opportunity, and that's us, right? As it turns out, the secret sauce for every shiny new gadget that we just can't live without, from the phone in your hand or the phone right here, to the wind turbines that we're all told was going to save the planet, to those F-35 fighter jets defending our airspace. Well, a bunch of weirdly named metals that we call rare earths. And the critical one right now is lithium. Lithium. Now, think of it like essential vitamins for technology in society. That's kind of what you get. You can have all the other ingredients, but without these essential rare earth metals, nothing actually works. We've tried lots of different ways, but we keep coming back to the same core technology. And for decades, we've been getting our vitamins from one place. Guess who owns the grocery store? China, China, China. Yeah. China controls like 90% of the processing of these critical minerals. It's kind of like betting or letting your biggest global rival be the one who sells protein powder to the entire Olympic team. What could possibly go wrong? Especially when a trade war kicks up. Well, the U.S. government, in a rare moment of lucidity, finally woke up and smelled the coffee, deciding that this dependency is, and I quote, unacceptable. And so, after years of talking, they're finally putting money where their mouth is. The Pentagon, the Department of Energy, they're throwing billions with a B at anybody that can find and produce these minerals on U.S. soil. It's a full-blown government-sponsored treasure hunt. And where does the treasure map lead? Well, Texas. Deep under East Texas is a geologic formation with the wonderfully unglamorous name, the Smackover. That's it, the Smackover. They've hit the mother lode. It's a massive, ancient underground sea of super salty brine. And get this, it is absolutely loaded with lithium. The Smackover Lithium joint venture recently announced that they have found the most lithium-rich fluids ever found in North America, right there in East Texas. And here's the kicker. Who's leading the charge? The same people that have been drilling Texas for over a century. Chevron, ExxonMobil. They are snapping up hundreds of thousands of acres. Is everybody getting in on this? They're using these deep drilling rigs with their deep drilling expertise, not for crude, but for this critical battery powering brine. And it's kind of like figuring out that Grandpa, who only ever listened to classic country, is suddenly the world's biggest Swedish death metal fan. I mean, it's a little bit weird, but you can't deny the raw energy of the pivot. So here's a story. This is a fantastic story. A geopolitical showdown, a technology revolution, a Texas tale. But what you don't really know, what you and I haven't figured out yet, how do we get a piece of this action? Right? Now, of course, this isn't financial advice. It never is. I'm just a guy on the internet with a microphone and a show. But let's look at where the smart money might be, kind of kicking the tires and sniffing around. You got the big boys, of course, Chevron, ExxonMobil. Chevron announced they're buying 125,000 acres of this prime lithium brine real estate. Exxon, right there with them, aiming to be a leading producer of this stuff by 2027. Buying Chevron for its lithium play is like marrying a billionaire for their personality. Yeah, sure. Personality might be great, but you're also getting that massive, diversified, dividend-paying financial security. But maybe you're not the marrying a billionaire type. Maybe you want the thrill of the chase. You want to ride on the back of the motorcycle, right? That brings us to the pure play miner type. Now, is this the Wild West? You need to be careful. For every one of these that does work out, there's going to be a dozen that don't. There's a dozen that go bust. So if you look at Texas Mineral Resources Corp, TMRC, Tango Mike Romeo Charlie, they're sitting on a mountain in West Texas that holds 15 different rare earth minerals. Sounds great, right? Well, they also have what analysts call a severe liquidity crisis. That's Wall Street speak for they're broke. Cautionary tale. However, in this new government-fueled gold rush, just takes a Trump tweet, Trump post on social media that they're going to inject cash liquidity and then off to the races. They've already done a deal with MP Materials, Mike Papa, the largest rare earth miner in the United States right now, giving them an equity stake. I mean, it's kind of like a guaranteed price floor. And there's an offtake agreement. So that's just a safety net. That's kind of like a golden trampoline, not even a golden parachute. Investors are now betting on who's next. We've had USA Rare Earth, kind of go a little nuts. We've had Neocorp NB and Lithium Americas, LAC, have all seen surging prices on expectations that they're going to be the next golden ticket from Washington. It's less about picking a company with the best geology and more about picking the company that has the best connections to the number one, or maybe just the best lobbyist in Washington. If you pick individual winners, well, it sounds like a lot of homework, right? There's classic picks and shovels type strategies during the California gold rush. I mean, we've talked about this a lot. The big money made by the guys selling shovels, picks, pans, blue jeans. In this case, that means service companies that help do the drilling. help with the pipelines, especially the tech companies that have mastered the new direct lithium extraction, DLE process. This is a technology that allows them to pull lithium directly out of the brine. This is a potential game changer compared to what we've had to do in the past, with acres and acres of ponds evaporating this brine. Now, for the few and the true that want to be diversified, I say the utmost respect. Well, there's ETFs, right? There's VanEck Rare Earth ETF, and there's the Strategic Metals ETF. Strategic Metals, REMX, or Romeo Echo Mike X-Ray. It's a basket of global rare earth companies. It's I want to be in the game, but I'm not sure I want to bet on anybody in particular. So there you have it. The Great Texas Pivot from oil to batteries. It's kind of a shocking story, I know. Geopolitical drama, technological arms race, a potential for investment bonanza, all rolled into one. And the U.S. government is literally creating winners and losers. Kind of building a domestic industry from scratch, complete with subsidies, price floors, all to go head to head with China. Is it going to work out? Who knows? What could possibly go wrong? But it's going to be one heck of a show to watch. And for savvy investors like us, maybe it's an opportunity to make some money. Maybe the best thing to come to Texas since the last oil boom. Do your own research, though. My job is just to point you in the right direction. You have to make your own decisions. Right now, the river's flowing into some salty water under East Texas. So that's what I found out. Diving into this stuff. So yeah, you've got other interesting things coming up. So this salty brine out there, it kind of runs down into the Gulf even. So should be an interesting new play right here. Interesting new play. The new gold rush, if you will. Alrighty. Welcome, everybody. Let's see what we got on the poll. 73 votes. 70. Most of you said no. 20, almost 30% said yes. That's interesting. I'm going to grab that poll. I'm going to copy that to myself real quick before I disappear it with another poll. All right. And start another poll. Does the shutdown end before see what y'all think? See what you think. Does the poll end before November 1st? And all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. I'm going to talk about some trades. I'm just the guy on the internet. You might lose money if you do them. I don't have a crystal ball. I have a bag of unicorn dust that, it's cheap, it's affordable, it's economical. Be careful. If you want somebody to tell you what to do or help you push the buttons, you need to hire and consult a financial advisor. It's not what I'm doing. It's not my job. I don't know your personal financial situation. Please be careful. You might lose money, blah, 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 blah. So, staring down the numbers here this week. Friday, we're supposed to get the core CPI. Keep bumping. That got bumped off a little bit. Usually we get that in the middle of the week. And then that makes, what the heck is going on? Why is my phone not muted? All right. What the heck is going on? It sounds like the market just opened. And that should make PPI the following week right in front of the FOMC. Yeah, FOMC is still going. They're not actually part of the government, so they're not part of the government shutdown. And here's this week. We had Coca-Cola this morning, GE this morning, Netflix after the close. We'll take a look at that in a minute. Tesla tomorrow. I've got 30 minutes of awesome coming up at 5 p.m. today. Remember, if you're a channel member, you get unlimited requests. It's the only time of the week where I do requests, and we do a member-only stream at the end of the show. That seems to be very popular. So if you're a channel member, there's a private Ask Me Anything member-only stream at the end of the show that we just go right into. So if you got questions, as long as it's not, what should I do with XYZ trade or what should I trade? Can't give you personal trading advice, but we roll into that. So there we have it. That's kind of what we got coming up. Funny enough, Amazon yesterday was out, affected a bunch of my automations and stuff. Not really my trade alerts, but it did affect copying them to Telegram. It did affect the sales of any new products. Amazon up today. It's funny, they had a big outage yesterday and they're up today. Why? Like the prices, it's completely, it's kind of funny, right? It's like, that seems like having a giant outage that took down like all sorts of things from Forkknife to Facebook to, just all sorts of stuff went down yesterday. And the company responsible rallies. It's kind of like completely opposite of the door flying off a Boeing jet, right? We were already at support. And as long as we didn't break down lower, ounce resistance, get back above that, probably going up here. It's crazy. Price matters more than actual events. The news doesn't matter. It's the craziest freaking thing. Craziest freaking thing. Apple yesterday broke out to a new all-time high. Look at that jump right there. I think crazy is about to get crazier. Crazy is about to get crazier. Now, I posted something for my Termar Trading Lab members. And I'm going to open this up, I think, if it'll let me. Here we go. Look at this right here. What if this is the way we're going? Now, maybe the bubble, the .com bubble, maybe this is what we're doing. Maybe not. The red or the, maroon or whatever color you're seeing here, it's red on my screen. This red is current. The blue is the .com era, 96 to 2001, 97, 98, 99, 2000, 2001. That was like 5-year pattern. Right now, if we're doing this, we're kind of 24, 24 is 1 year, 25, 26, 27, 28. Could be 28 before we're over here on the downswing. I thought that was interesting. This, the left-hand panel is the S&P 500. The right-hand panel is the NASDAQ. I was talking about the fact that we could see a blow off top. That would be this ridiculousness here. So we could chop around for the next year, potentially. Potentially we're just right coming into the beginning of 1999. We kind of chop around a little bit, and then we go parabolic into the top. Could be another year of this. Pull that up here. Pull that up here. By this time next year, we could be up here, staring down the potential downside. Then the S&P a little bit rockier, but look how well the pullbacks mirror that we've had. It's kind of interesting. Kind of interesting. And this is out of the last pullback. 2022 was a pullback year. So this is coming out of that 2022 low. Adjust the scales and all that stuff. It's I find this very interesting. Now, Is it likely? I don't know. I don't know. All right, let's end that poll. I'm glad you enjoyed the lithium topic. And let's see. Let's start another poll. Do you think we might be mirroring that? Now, the interesting thing, I think, about that whole thing, I've had a lot of my colleagues say this is obviously isn't a bubble. We're not going exponential. Blah 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 blah. But at the same time, what got overbuilt? And this is what people don't necessarily think about. Like during the dot-com bust, what was the thing that we were building, furiously building, to try to, for infrastructure for this dot-com internet age? And it was the fiber optics, the pipes that provided the internet everywhere. And that got overbuilt. In fact, there's still 25 years later, there's still tons of dark fiber all over the place that got installed that hasn't ever been used. Literally, fiber optic cables all over the place that have never been used. So, what are we building right now? We're building these AI data centers. So, what if they overbuild? There's all sorts of, supply constraints and power constraints and this constraints and that constraints. But what if we overbuild all of that? What if the actual cash demand for products built with AI doesn't catch up to the pace of building? It's like, yeah, the companies that are building right now, they're profitable for the most part, but how much would they get punished if they spent billions or trillions of dollars and they're making millions off that infrastructure investment? I could see this, I could see the case for being on this path that I just showed off. Like, I mean, it's reasonable to. What if data center capacity starts really coming online and things get a little crazier and there's another new thing that comes out? I mean, history has shown generally when you have a new technology, there's only two companies in this new technology that are profitable. Everybody else is fighting for the scraps. It's shown this over and over and over. The two main companies kind of dominate, and then lots of other companies fight for scraps. You basically have two main companies that get the market share, kind of dominate, even if their product's not the best product. Yeah, the better marketing, the better, this happens over and over and over when new things come out. That's why you've got Apple and Samsung on the phones. Everybody else fighting for a piece. Scrappy. I mean, we can see this over and over and over. It's just kind of a marketplace thing. There's usually two main leaders, and then everybody else fights for the pieces. So think about how many AI companies there are building these large language models and world models and this and that. Maybe we get to the top and people suddenly realize that there's only really two main ways to play. Everything else, not so profitable. I don't know. I can speculate all day. So, potentially this top could keep rocking. We haven't gotten the big blow off top yet that I've been thinking we would see. We could kick one off, but we haven't got there yet. So This, look at that. Beautiful hit right there. And retracing back to the roadmap line. That's probably what we're going to do. Can we hold it and bounce? Or, I mean, there's potential we get another one of these larger pullbacks. That would put us back. You know, look how, that's just copying the last one. Can pull all the way back down to here. Be careful out there. We're not even talking about the big one that was from 2 Fridays back. Or we could just bounce here and go on higher. ES kind of looks this, you know, kind of looks the same, but we haven't reached the target zone there. So this is probably an extension there. We might see a pullback and then some continuation over the next few days. And then we might get that bigger down into November. You know, does this line up with the FOMC? That'd be on the 29th. So this could push out. And we could rally into the FOMC right over here on the 29th and then take a trip down. But we would need to stay above this over here. Otherwise, something else is cooking. Look at the cash index. Haven't pushed out yet. Still likely to get this move up here. Next upside, 67.97 on the cash. SPX. Now the ES1 is futures and NQ1 is futures for NASDAQ. Why do I look at futures? Because they provide a more complete story of price action than the daily cash price action. You know, there's gaps in here, all sorts of gaps, especially on the daily candles here. We get gaps up, gaps down, gaps, you know, gap. Lots of gaps. And the futures, trading 23 hours a day, 6 days a week, don't leave much gaps. In fact, that one's already been filled in. This one's already been filled in. We just don't leave many gaps. So that's the potential path we have going into November. We'll see. You know, maybe this takes, maybe it goes a little bit further into November. Then we get a bigger retrace, and then we get more explosive move higher. Yeah, this could just chop in here for kind of like the chart I was showing off a minute ago. It's not without big swings. See, we could rip up, you know, pull on up in here, get a pullback, go up higher, get a bigger pullback, bigger volatile swings, and then roll. That could be the next year. Be really interesting if that keeps following that right there. I think it'll be really interesting. So, all right. Dun, 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 dun. It's okay, David. We know you're a smooth brain. Just joking, man. Hope Lorraine's doing well. Everybody, give prayers to David's Lorraine there. She had a problem over the weekend, and we hope she has a speedy recovery. Got oil sitting here, cooking right there. Watch out for the breakdown. 50 right there. I'm just waiting for that to go. So far, that's looking like wave 3 action. And it looks like a 1, 2, 3, 3 of 3. We can see this push on down pretty violently here. Gold taking a step back today. Watch out. This is setting up for a multi-100 point pullback. They could go pretty vicious here. We could be back down in this area pretty quickly. And a revisit of this breakout of highs wouldn't surprise me one bit down here around 35. I kind of warned about this potential when we were pushing out through the 3rd standard deviation. That takes a lot of energy out of the market and usually results in a pullback, at least to the 1 standard deviation if not all the way back into the roadmap line. Too far, too fast, too hot. Bitcoin, on the other hand, that is not no bueno, as I tend to say. Not good. To reject right there. Now we got to see this hold at 618. Bust through. If we don't hold, probably coming down in the nine, probably going to test the 100,000, if not get into the 90,000s. And a 618 retrace will put us down at 92,000 area. 91, 92. All right. Yeah, Lorraine, getting lots of love in the chat there. Ethereum. Well, low or high? High or low? My least favorite pattern is right there. So break out, get through here, going higher. Break down is no bueno. Now that would line up with Bitcoin going lower. So right now, these two having some collaboration. If they turn sour, it's not going to be good. That might be... We've already got signs that crypto winter's here. This is already a sign that this might be the start of crypto winter. That's the first warning sign. We don't have this retrace complete yet, but that is potential 5 down. Working on this. If this came up, tested at 618, that would give me a lot more concern. Now, this could be all part of the same correction, though. This could just all be part of a bigger correction that started over here and just happened to make a higher high. It's unclear. And we won't have clarity until we get confirmation that we're going on down. And unfortunately, that's why I always say have an exit plan. I know Ed, I think it was, already cashed out. Trim the sails for potential bigger crypto winter pullback. Smart move. I mean, that's a warning shot right there. We don't get 20,000 point pullbacks on things very often. There's a 20,000 point pullback, and then we just made a lower low. The warning signs are there that crypto winter is coming, as they say in Game of Thrones. Winter is coming. NKD shooting on up, getting a little soft today, but this indicates global liquidity party still going on. I'd be shooting up for somewhere around 53,000. That's what I would expect on the next push higher. Dollar turning back higher. I'm going to retest the roadmap line here. If we do make a lower high and break further down, we're going to make a lower low than that right there, more than likely. If we push through, back test from the top, it sets us up that this low will stay intact for a while. And we'll probably go back to the highs. If we get above 102, that can kick off a big short squeeze. Short dollar is a big trade. If we bust through the 102 area, a lot of that's going to get liquidated out. So be careful out there. Netflix, as far as earnings go, the curious case of what's going to happen. We have a very bullish potential setup here, and that tag higher kind of confirms that this might play out to the bullish side. We can see a pop that took this way up here. The target on the upside would be something like 1375. Now the softness here, clicked the wrong thing. And that one is the one I need. The softness here does make me question, can we actually pop? Can we actually pop this pattern, move up, retrace? If we're doing the measured bounce, that puts it right here as the next target. That was the wave 1, the wave 2. If this is a 3, bullish, new highs, that target would be right there, and it just happens to line up with the fib line of the pullback. So that, funny enough, the proportions of this and the proportions of this measured bounce and market roadmap bounce both line up for the same target. Now, does it have to do it on earnings? No, we could just pop up in here and grind up there for the next, and we could just make a small pop and then grind for the next few weeks. So ways to potentially play this. Yeah, Netflix NFXL. There's some 2x leverage stuff that you can get. Now, that was 11% on Netflix itself, so we're only looking like at 22%, which doesn't even put it to a new high. That pullback was pretty vicious on this, but it would go from 60-ish to 72-ish. Bigger percentage return potential. And there's no options. So you got to be careful. Say, some people have see me playing options on some of these leverage tickers. It's very calculated. You got to be very careful where you play. So there's some other ways. NFLU could be another one to look at. NFL U. See if we got any options. We do have some options on this one. Let's look at the liquidity. Not very liquid. So caution is advised. NFLU. So the first warning sign is the fact that there is November, December, no January, no February, a March, no April, May, and then a June. Then you look in here, you grab the open interest, and these numbers are pretty small, and there's no volume so far today. Looking later in the day to see if there's volume is better plan. But you look in here, even the December, this is not a popular way to play with options. And be careful on leverage. So just not very popular way to play. So it does leave you, oh, cool. I think my Apple AAPU just hit, I had shares of Apple. We just hit my 35 targets. I think, was the high on that 35? Oh, 34.83. I haven't ordered 35. Hopefully that pushes on up just a little bit. Let's put it at 35.01. See if that hits. They're not big positions. They're just a couple small positions. All right. I feel like I've beat the horse here on the other Mag 7s, but in case you're new, you haven't been to the show lately, holding the roadmap line is bullish for Netflix. Google has potential to come up here, but it also has potential to retrace into the breakout zone from 207 up to 230, where we gapped up there. So this is a potential to revisit this area. And the target right now is just right up there at 263. Meta, like I said, holding the roadmap line is bullish. Amazon holding the roadmap line is bullish for a potential breakout. 257, 272. Apple is breaking out. Target 276, 292. Microsoft probably going to retrace further deeper into this zone here. We've got this first pullback, the bounce, hold at the 618, 1, 2, can take us down in here pretty quickly. Somewhere at 480, maybe hold on to 500. It's kind of a psychological level, but we could see it on down to 460 even, 455. NVIDIA grinding in here. It's just stuck in the mud. Like despite all the talk and all the things going on with NVIDIA, it just cannot get out of the mud. And it may need to hit the roadmap line and retest the breakout here before we can get any kind of momentum to push this up to ridiculous levels like 212. Tesla earnings coming up on Wednesday. We'll talk more about that probably on 30 Minutes of Awesome and maybe tomorrow morning. Well, probably tomorrow morning. They're probably going to have their best earnings ever. Can that push it above 500? That's been my long-term target for, gosh, years. Been talking about that since basically I became a guru that we were going to 500. It just took a while, long while. Revisited back to 100. So I give you 5x potential if you bought in here. That's what we got. So 500, maybe 550, maybe 600. I don't know. Big gap or just keep grinding. We'll see. We do have the shareholder meeting coming up, I think, in 2 weeks, 3 weeks. So should be interesting what all happens here. But they've got the earnings, and then we'll roll into the shareholder meeting. It'll be interesting to see what their plan is to make money post tax credit for EVs. Best earnings, why? Because they sold more cars than they ever have. Everybody knew the tax credit was ending, so they bought Tesla cars like crazy, and they sold more Tesla cars than anybody expected. So we already know that. It's just how much money did they make doing it. And they sold more power systems than they expected. They put more charging stations out than anybody else. So Netflix, we talked about that potential already. I go pull gainers and try to look for opportunity. That one turning sour here. I pull decliners and look for opportunity. And usually there's more opportunity in the decliners, but that's coming back to the roadmap line pretty viciously right there. JNUG, same. Nugget, same. Shiny, same. GLD, I don't know. We might just do a retrace. But those leverage tickers can all go down pretty quickly. AGQ, same. Roadmap line. AEM, same. Like all these things need a bigger retrace. It's, there's a gold miners dominating the thing here this morning. Palladium, that hit, wow, that hit the extension target. TPLT, almost got to 160. I still expect that to hit 160 one of these days. If you don't want to wait through the pullback, I'd get out, get back in down here. But if you're gonna have FOMO of missing out on the pop to 160, just hold on. It's gonna be volatile. It's gonna be volatile. Yeah, gold dominating this morning. NEM basically tagged 100. Now pulling back. Wow. So many gold miners. Oklo. Lennar. Careful on home builders. That broke below the roadmap line. Back tested. If we maintain the downward pressure, we can go make another lower low right down here around 95. Nail looking kind of soft in the same fashion. It's a 3x leverage on home builders. TR Horton. Baba winding up for the breakout, I feel like. Ooh. So this is sitting at the big 618 over here. Zoom this out. We're kind of hovering right here. This is a fairly bullish setup to potentially pop from here up to here. But in what time frame? I don't know. That's the difficult part. STX was red. Now it's turning a little green. That needs a revisit of the roadmap line. Barrick Mining. Roadmap line. All those need some retrace. All right, I go pull gainers, decliners, and signature setups. I have 22 this morning signature setups that set up for an entry. This high, this low. There's the entry. This is the pattern. Bounce off the roadmap line. You don't have the roadmap line? Links in the description. Or you can just go watch the channel homepage. I have a video pinned to the channel that gives you the code. But if you don't want to do code, links in the description. So there's the entry. Looking for that target 262.50 right there. You don't get these flags. This is my algorithm running in the background here. Come up with statistics. 56 trades, 75 negative on the profit factor. I would be careful. When the losers lose, they lose a lot. Next one up. This algorithm is kind of the core of pretty much everything I do. Even the wheel strategy where I make the money over here. Somebody yesterday was like, do you even make money doing this? There you go. Year to date. Verified. Profits. Profit year to date. 28.8. And this is the account that I have set up to audit publicly. You want to see the trades? They're all down here. There you go. There you go. So look at this pattern. There's the high. Here's the low. And oh, it picked up the lower. Picked up that lower high. Kick off an entry. 10, 20 targets. I don't necessarily like that one. It's because of the ambiguity and the choppiness. This one much more clear. AME. Here's the high. Here's the low. There's the entry. 193.82. 60 trades. 85. This is a good one. Pretty solid performer here. That indicates it does this pattern a lot. 85% of the time it works. That's really good. Check plus. Anything over 80, really good. The average is 75 across tens of thousands of trades. So anything bigger than 75 is outperformer. And then profit factor. I like it over 2, but 1.6, 1.2 is the average. So pretty good right here too. That one might work out. Of course, it might not. 50-50 on any of them. They're either going to work or they're not. It's kind of the funny thing. The history says that more than likely it will continue. Worked out back here. There you go. That's the target. AME. Another bounce. That one's a really clean and pretty. No history on that one, but 30 target. Right there. So if you have less than 6 trades right here, I mean, if you have less than 30, when you have 6 trades, that's when you have less than 30, these numbers don't mean anything because it's not a statistical significant population. So that was stopped out last time. Let's see which one it grabbed. That one right there. 132. So this one, 49, does tend to trend because we've got right at 80. That's a good. Even though it stopped out last time. And the profit factor just above standard. So this one does tend to trend. Here's your entry. There's your potential target, 132, right there. Another one. We got some good ones today. Good ones. Here's the entry. 255. That's a caution. Negative profit factor. Anything under 1 is negative. That means you lose more money than you make. Well, as an example over here. Come on. Load. My profit factor right now is 6.37 year to date. So I make $6.37 for every dollar I lose. Not bad. Here's the high, here's the low. Kicking it off, 62.27. 45.84. Yeah, just nice, really good ones set up today. Like lots of good, solid plays here. Cows. Cash cows. What an interesting ETF. I can't say I ever knew this existed. Let's see what's in. I'm curious just to know what's in this. Cash cows. Applied Materials, McKesson, Newmont, Warner Brothers, Gilead. Interesting. It's like a really just kind of normal ETF. Dividend, not great. Yeah. Performance, not the best, but short term might work out. CVCO, another good ones. Like this is packed with awesome trades today. Beautiful setup. 617. Statistics don't look great, but the pattern looks really nice. I love the cleanness of this. That's probably going to work out on that one. Another really clean one as far as the pullback. Nice 3-wave pullback. Continuation 2863. No history on that one. FSBC missed on this time frame. So I have a tool that runs in Python that goes and finds the list, and the roadmap line is calculated differently. Funny enough, EMAs, you would think EMA is EMA and it's the same everywhere, but when you calculate it for scientific data and when you calculate it for financial data, they use 2 different equations to do that, and it creates a discrepancy between Python doing this and TradingView. So it didn't actually hit the roadmap line in TradingView, but it did when you use the scientific way to calculate an EMA. I find that interesting. It's just interesting. It's not really tradable. It's not really anything. It's just, you know, one of those engineering nerd stuff in the background. It took me a while to figure that out. So here's this high, here's this low, here's that potential entry in 81.56. Looks like a net loser on the average. For HYG, microchip. Here's the high, here's the low. Kind of flat coming into this, so that is not a trend. I would expect that to kind of continue. It is still valid. We could still hit that 70.26. These are nice numbers. Good, good, good. Doesn't make it invalid. You know, still valid. It's just I don't like that sideways chop coming into it. I don't like it. I've traded enough of these that I don't like that. I'd rather have a nice, clean, clear one. 86 on that one. 22, not statistically significant, but it does have a high profit factor. There's a very clean bounce. Not a lot of chop. Broke up through, retraced, continuation, 1933 targets. And it doesn't, that was not the winningest one. This one QCOM firing off the entry 177.47 is the target. Right here. 26 is not 30. And it's kind of a little bit loser on average and loser on average. So be careful on QCOM. Doesn't mean it won't work. 75% of the time the pattern works, agnostic of the ticker that we're looking at. Here's the high, here's the low. Entry 1521. If you're a CashBot subscriber, this is the exact same pattern we're looking for on SPY, QQQ, and IWM on the 2-minute time frame. 120 is the target. That one looks like it may work out. 44, that's good. 75, that's pretty average. And negative profit factor, I wouldn't touch it. I'm not touching that because the risk of loss. Yeah. SVXY, our old pal. Short VIX. Now 21 trades, 71, and a positive profit factor. This is close to being just an average trade. If you believe VIX is going to relax more, this possibly could come on up to 52.23. SYK. Here we have the high, here we have the low, there we have the entry, and the target is 403. Just a nice, like several of these, just a nice average performer. VNQ. Oh, Lorraine jumping in the chat there. Awesome, everybody. Here's the high, here's the low. Potential entry here, and 94.33 target. Right up there. And VTRS. Potential for this to come on up here. 11. It's got 33. That's less than average, and that's negative. So yeah, hopefully that helps. I've been, that was 22 tickers that have potential setups for an entry today. Now remember, on these trades, the average trade lasts 45 candles. That's not trading days, that's candles. Candle maker isn't open on the weekends, right? So that's candles, not trading days. Standard deviation is 35. Sigma. It's 35. So when you do 3 sigmas and add it to this over here, that gets you 150 candles. Which, when you pull that out, it's about 210 calendar days, or about 7 months. And that covers 99% of the trades will last 7 months or less. 1% go longer. So that's like 1 out of 100 or 10 out of 1,000. We pump out several of these a day, so be careful. Several of these can last longer than 7 months. So if you're trying to play options on some of these, you don't want to run out of time, 99% of the time, play 7 months out. You can buy shares, or you can play smaller time frames if you want it to work out faster. And that's what CashBot does. I thought I'd go over that really quickly before we leave here today. Just go through what CashBot's looking for. For those that wonder, look, we have a bounce. We have a potential bounce cooking. There's the pullback. We hit the roadmap line. If this comes back above, and we could get an entry right there on SPY. That's what we're looking for right there. A high, a low, and which high? Well, This high was higher than that high, so it's probably this high, this low. Looking for that extension out. And the cash bot will throw out the trade to take advantage of that. QQQ. There's a little bit different pattern cooking here, and this might be too many candles. So it may filter this out as taking too long, being too slow, and more likely to fail. But that high, that low, that potential entry, if we were to come up here, get a close above, it takes a candle close above to kick this off. And then IWM. I'm not sure if my filter will filter this out or not. It may filter this one out too, as being too goofy here. Kind of hit that ceiling. Got the pullback. So if you see this fire off, it's valid. I'm just not sure it's going to. Especially if this messes around in here, get another pullback before we pop up, it may not fire off this bounce. So SPY looks like the most likely to fire off if we can get some positive action. IWM, QQQ, questionable whether they're going to fire off. So hopefully if you're a CashBot member and you're wondering if this kind of stuff, how it works, there you go. That kind of goes through it. Have a great day, everybody. I'll be back. 30 minutes of awesome. I'll be back on Market Masters at 11:30. And be careful out there.